I'd like to request a motion and a second to call to order the April 10, 2014 meeting of the Sunny Mae Mortgage Insurance Committee. The motion and second recorded will be used for all action items before the committee unless specific items call for a different vote or unless any committee member wishes to record his or her vote differently. And I have a motion and a second.
So moved. Second.
The minutes of the meeting of the Mortgage Insurance Committee held on March 6, 2014 shall be deemed approved absent corrections from the directors.
So we now move to the program action items. Item number 2, package is a resolution approving 100% mortgage insurance on a $6.8 million HFA permanent first mortgage loan for CAB Senior Housing on 590 DeKalb Avenue in Brooklyn. Mike?
This comprises 100% insurance of an HFA loan for the acquisition and mod rehab of 111 all low-income units. There's a HAP contract covering all of the units. In addition to the insured first mortgage, there's $8.4 million in federal low-income housing tax credits. The development entity is comprised of 3 not-for-profit developers of affordable housing, 2 of which, Los Soros and St. Nick's Alliance, are repeat HFA and Sunny Mae borrowers. The loan amount is $61,000 per unit, which equals 29% of the project's total development cost of $210,000 per unit. The project would break even with a 10% vacancy and collection loss or an 8% increase in operating expenses.
Mike, would you describe the shelter?
The project has shelter, rent, or real estate tax abatement. And this is different from, and in some ways, on a long-term basis, probably is not as advantageous as a 421A or 421C. Shelter rent tax abatement calculates real estate taxes as a percentage of the project's revenue net of the project's utility expenses. So the taxes do go up as the project's revenue goes up. But there's a credit for utility expenses.
And why were they not eligible for one of the others?
I don't know.
You know?
That I don't know. And this is I know that this is what is currently in place. I don't know historically why this.
Got it,
Why they
okay.
got this.
It's a lower increase in operating expense. The 4% it compares differently. Usually we're at 8, and you know.
Oh, this actually.
Is that a misprint?
No, it's a mistake.
That's what I thought.
It's a mistake. It's actually 8%.
Okay. Thank you.
Well,
Could you just give me, again, a little context on the developer fees? It always seems like they're so widely dispersed. I mean, see here the use of funds here, the developer fees, almost $2.5 million. I mean, what? Explain to me how that you arrive at these numbers, or who arrives at them, and what range they're supposed to be in.
The insured mortgagee arrives at them, and it's a max of 15% of the development cost exclusive of the developer fee. And in cases where there's a substantial acquisition cost, it's usually computed as less than 15% of the acquisition cost. So it may be 10% of the acquisition cost, 15% of the rest of the cost.
There's uses of funds where it's 23.3 and their fee is 2.5 is.
It's not.
It's
It's not inordinate.
Okay.
And they're deferring half of the fee. And the max deferral is usually pursuant to IRS regs. It's not more than can be paid out of cash flow over approximately 13 years going forward. And in a project with low-income housing tax credits, the credits are computed on the developer fee. And the credits are worth generally about a third of the cost. And here, half of the fee is being deferred. So most of the cash fee is paid by the low-income housing tax credits.
All right. Okay. Any questions, comments? Okay, hearing none.
The resolution before the committee is for approval of mortgage insurance and a commitment for the provision thereof for CAB Senior Housing 590 DeKalb Avenue, Kings County. Assuming the first and second previously entered, all in favor, please signify by saying aye.
Aye.
The motion is carried.
Our next resolution, item number 3, approves 100% mortgage insurance on a $6.6 million local initiative support corporation permanent first mortgage loan for Genesis Robert F. Kennedy Apartments on 13th Street in Manhattan.
This comprises mod rehab of 91 low-income units and 17,000 square feet of commercial space. The developer, Help USA, a well-regarded and experienced developer of supportive low-income housing, is relocating its corporate headquarters from its current rented space in the financial district, where they're paying $1 million in rent, and here they will pay $500,000 in rent. So there's a substantial savings to Help USA. They currently own the building outright, so there's no acquisition or refinance cost. And as a result, the loan amount is only $73,000 per unit, which equals 90% of the project's total development cost of $81,000 per unit, ex the commercial space. And because the commercial space comprises 31% of the project's gross income, we've underwritten it to a pro forma income to expense ratio of 110 to 1 rather than 105 to 1. And with all of the commercial space vacant, the project would have negative cash flow of $200,000 per annum. So the borrower will capitalize a $500,000 debt service reserve fund, which would cover the negative cash flow for a 30-month period to allow time to release the commercial space. The project is very well located. It's a block from the Union Square subway station, next door to an NYU dorm with university office space on the ground floor, across the street from another NYU building. And we think that it would not be difficult to release the commercial space at $29.50 a square foot. The project would break even with the commercial space leased at $17 per square foot.
Good.
So, Mike, are they deliberately keeping the commercial space vacant right now so they can do the rehab?
Yes, they have all of the existing commercial tenants. They didn't renew their leases. So all the ground floor space is vacant.
But that was an intentional strategy
Yes.
to do the renovation for their office space and renovate the commercial space, and
Yes.
then they'll release it
To
probably
themselves.
with, just to themselves.
Yes.
There won't be any other tenant there
They won't
other
be.
than
They're going to
themselves?
occupy all of it themselves.
That's what I wasn't sure.
Yeah.
So, in essence, I mean, you're underwriting this conservatively, but you know this money's coming in.
Yes.
So this, yeah, okay.
Yes.
I remember when this project was first developed by somebody in very high office in our state.
That.
Yeah, who's that?
It's a really nice project. There's a picture of it.
Comments, questions? I just asked, I used to serve on the board of Help USA, but that was, more than 10 years ago, so I just got okay that I could vote on this from
Yes.
my council here, so. Any questions, comments? No? Good.
And I would just note, this is the first loan that we've ever insured for the Local Initiative Support Corporation. They just became a NYSERS originator. So it's their first loan and our first loan with them.
Great,
Yeah, that's good.
great. Pretty soon Enterprise is gonna start doing it too,
Yeah.
and I'll have to recuse myself. Who's servicing these, are they servicing it?
They're going to
CPC
sell
will
it to
serve-
NYSERS, CPC
CPC
will
will
service
service,
it.
got it. Great.
So the resolution before the committee is for approval of mortgage insurance and a commitment for the provision thereof for Genesis Robert F. Kennedy Apartments, 113 East 13th Street, New York County. Assuming the first and second previously entered, all in favor, please signify by saying aye.
Aye.
The motion is carried.
Our next item, number 4, is a resolution approving 100% mortgage insurance on a $3 million low-income investment fund permanent first mortgage loan for 25 Madison Street, 163 Subtham Street, 354 Saratoga Avenue, 1619 Lincoln Place, 1719, 1725, 1752 Sterling Place in Brooklyn. Mike?
This comprises 100% insurance of a low-income investment fund loan for the acquisition and substantial rehab of 95 mod-income units. The units are not low-income units. There are no tax credits. The vacant units will be income restricted at 65 and 75% of the AMI. It's an HPD PLP loan. In addition to the insured first mortgage, there's 7.6 million HPD second mortgage. The development entity is controlled by 4 developers whom this will be the 4th loan that we have insured for Bramwell and Varkakis and Upshaw. And our total exposure to them is only $7.5 million. The insured loan amount is $31,000 per unit, which equals only 26% of the project's total development cost of $123,000 per unit. The project would break even with a pro forma 11% increase in operating expenses or a 12% vacancy rate.
Questions or comments? Yep, fine, sir.
And the resolution before the committee is for approval of mortgage insurance and a commitment for the provision thereof for 25 Madison Street, 163 Sidon Street, 354 Saratoga Avenue, 1619 Lincoln Place, 1719, 1725, and 1752 Sterling Place, Kings County. Assuming the first and second previously all entered, all in favor, please signify by saying aye.
Aye.
Motion is carried.
Next item, number 5, is a resolution approving 100% mortgage insurance on a $2 million Jpmorgan Chase permanent first mortgage loan for 331 Saratoga Avenue, also in Brooklyn.
This comprises construction of 80 low-income units. This is a 9% credit deal. In addition to the $2 million first mortgage, there's $18 million in federal low-income housing tax credits. Half of the units, 40 of the 80 units, will be restricted to formerly homeless single adults, and there will be a master lease between the development entity and CAMBA, which is in its own right a development of low-income and supportive housing. The development entity is controlled by Martin Dunn, an experienced and prolific developer of both affordable and supportive housing. And our total exposure, this will be the 9th deal that we have insured for entities controlled by Dunn, with a total exposure of $18 million. The insured loan amount is only $26,000 per unit, which equals 10% of the project's total development cost of $259,000 per unit. So this is a fairly efficient project. The project would break even with a 10% pro forma vacancy and collection loss, or a 7% increase in operating expenses.
Bill, I think I need you to move approval on this. I need to recuse myself because we're the tax credit syndicator, the other affiliate entity.
Mrs. March, any questions, comments? Yeah, I'm fine with it too.
I like it.
Yep, I like it too.
Then the resolution before the committee is for approval of mortgage insurance and a commitment for the provision thereof for 331 Saratoga Avenue, Kings County. Assuming the first and second as entered, all in favor, please signify by saying aye.
Aye.
The motion is carried.
Our next item, number 6, is a resolution approving 100% mortgage insurance on a $4 million CPC permanent first mortgage loan for 733 Broadway in Albany. Mike?
This comprises 100% insurance of a CPC loan for the acquisition and historic readaptation of a vacant commercial building into 29 residential units. There's a 20-year pilot with the City of Albany, but there is no regulatory agreement, but the units are affordable between about 80 and 110% of the AMI. The development entity is controlled by North Star Investments. This will be the 3rd loan that we have insured for entities controlled by North Star.
I'm surprised we're only up to 3. I'm surprised that we're only up to 3 with Higgins. Yes.
Yeah. Actually, we've done two in Watertown, and our aggregate exposure is $9.5 million. The project, the loan amount is fairly substantial. It's $138,000 per unit, which equals 77% of the project's development cost of $178,000 per unit. But there's no subsidy in the project. There's $1.2 million in equity. The project would break even with a pro forma 22% vacancy rate or a 55% increase in operating expenses. And it would also more than break even with all of the commercial space vacant.
Which is why I questioned. It's, you know, it's just a philosophical question, I guess.
Yeah, I just wanted to, I mean, I assume, I know we're not taking any lease-up risk, but market rate condos in I mean, I haven't been to downtown Albany in a while, I hate to admit that, but in an area that is, I know we're only, once they get leased up, will our insurance go into place, but do you have any issues about, first of all, the cost per unit is fairly high, the market rents, I think, it's condos in that area of, I mean.
I think it's a higher than standard risk because it's not low income, it's not subsidized. But we've tried in the downtown areas of upstate cities to be more flexible in our underwriting because there is so little development and so little private sector development.
So this is more of a redevelopment?
It's more of a redevelopment and
revitalization play?
Yes, yeah, and we've knowingly done, I guess, more aggressive underwriting on the sort of main streets of Syracuse and Albany and Buffalo and Schenectady and Troy. And generally, these projects have worked out fine.
But they've
Yeah.
usually had pilots or some sort of tax.
This has a pilot.
This does have a pilot.
But bigger subsidies.
Yeah, so, I mean, I'm, you know, this would be a lower priority for me if we had scarcer resources, but when we go to the end, we seem to have sufficient
We do.
proceeds coming in now that that's not an issue. I really do support the revitalization efforts. I would be much more concerned if we were taking any kind of rent-up or sales risk on this.
Mhm.
So, I just want to, and because it's a condo, there will be sales before.
No, it's not, it's rental.
I thought I saw it was a condo.
No,
It's a rental.
it's a rental.
Okay, but we're still not taking rental risk.
Like, I'm looking at the map and I'm trying to, Route 733 Broadway, yes, it's just hard to tell from the map. It looks like it's almost directly downtown.
It is.
So if you,
It's 6 blocks from the Capitol.
right, so,
And it breaks even with a 22% vacancy rate.
right.
Pardon.
Yeah, those figures were
Yeah.
astonishing.
Good. Any other thoughts or questions?
The resolution before the committee is for approval of mortgage insurance and a commitment for the provision thereof for 733 Broadway, Albany County. Assuming the first and second previously entered, all in favor, please signify by saying aye.
Aye.
The motion is carried.
Next item number 7 is a resolution approving 100% mortgage insurance on a 3.25 CPC permanent first mortgage loan for 184 and 188 South 2nd Street, 743 Driggs Avenue, 258 Grant Street, 249 South 1st Street, and 201 South 4th Street in Brooklyn.
This comprises the very substantial rehab of 124 units. There's an HPD regulatory agreement that will require that 20% of the units be rented to tenants whose income does not exceed 60% of the AMI. The remaining 80% will be rented to tenants whose income does not exceed 120% of the AMI, but the rents are set at 50% of the AMI. So HPD is seeking a wider band of tenant eligibility, but the rents are set at affordable at 50% of the AMI. There's a $1.7 million second mortgage from HPD. The development entity Los Soros is also the development entity on the HFA CABS loan that was the first item on the agenda. And the loan amount is only $26,000 per unit, which equals 61% of the project's total cost of 43,000 units. This is a very efficient project, and it would break even with a pro forma 8% increase in operating expenses or a 14% vacancy rate.
It was a low square foot cost too for
Yeah.
substantial rehab.
The project would, would break even with 2/3 of the commercial space vacant.
2/3?
Yes.
Good.
Thoughts, questions, comments?
Hearing none.
The resolution before the committee is for approval of mortgage insurance and a commitment for the provision thereof for 184 and 188 South Second Street, 743 Driggs Avenue, 258 Grand Street, 249 South First Street, and 201 South Fourth Street, Brooklyn, Kings County. Assuming the first and second previously entered, all in favor, please signify by saying aye.
Aye.
The motion is carried.
Our last resolution is approving 100% mortgage insurance on a $2.59 million CPC permanent first mortgage loan for 615 Sterling Place and 816 Washington Avenue, also in Brooklyn. Mike?
This comprises 100% insurance of a CPC loan for the, in case one substantial rehab and a new construction of 8 low-income units and 6 market rate units. There's one substantial rehab of one building and then replacement of another building that burned down during the rehab. The 8 low-income units, as shown in the rent schedule on page 3, have very, very low rents, ranging from $286 a month to $564 a month. And then there are 6 essentially market rate units, which subsidize the very low-income units. Larry Hirschfield is an experienced CPC developer. The loan amount is $185,000 per unit, which equals only 30% of the project's total development cost of almost $500,000 per unit. This is a very expensive project. The project would break even with a 6% vacancy and collection loss, or a 30% increase in pro forma operating and maintenance expenses. And this will be the 4th CPC loan that we have insured for projects developed by Mr. Hirschfield.
What's the total on the projects? You know?
Yes. Only $8.5 million.
Thoughts, comments?
I'm fine.
Good.
The resolution before the committee is for approval of mortgage insurance and a commitment for the provision thereof for 615 Sterling Place and 816 Washington Avenue, Kings County. Assuming the first and second previously entered, all in favor, please signify by saying aye.
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 The motion is carried.
Good. Our last item is just information item. Mike, do you have any thoughts about that information?
Just that in March, the mortgage recording surtax fell to $8 million, but in April, it looks like it's going to be back up to $15 million. There seems to be some, if you look on the last page in the MIC book, there seems to be some seasonality, which I don't understand, in the collection of the mortgage recording tax, where it declines between February and March, and then goes back up in April.
It's still the highest it's been.
Still has been, yes, and New York City, the mortgage recording tax for New York City was over $9 million in April. So with the rest of the state, it should be back up to $15 million.
Strange that, but yeah, I don't think it's trying to sort of number.
Anything on the delinquencies? Any trends?
No, they're fairly stable at a low rate.
I just want to note that I think it's great that we've got a larger diversity of lenders coming through,
Yeah.
which is really, helping us to diversify our
5
base.
different lenders?
5 different lenders.
5 different
Yeah,
lenders.
that's-
This one
that's
just today.
fabulous.
Yeah,
Yeah.
yeah, I agree. What do you attribute that to, Mike? Just, is that This is strength of the economy, we're just, Rich, what is it?
The increase in the number of lenders. NYSERS tried to increase the number of lenders they would do business with. So before she retired, Kathy Martino, who ran economically targeted investments at NYSERS, reached out to additional lenders. So they added lists, they're about to add Wells Fargo. And then I think CPC's problems made it possible for other lenders to pick off some of their borrowers.
I think that's exactly.
Yeah.
Terrific. No other business, so we'll call for a motion to adjourn.
And assuming the first and second previously entered, all in favor, please signify by saying aye.
Aye.
The motion is carried and the meeting is adjourned.